Our big money index is by far our most popular breadth indicator. I want to show you how it works and why it is a must-have tool if you are a finance professional. So now that we've logged into the MoneyFlows portal, you could switch to dark mode or light mode. I am going to go with dark, just fits better. We can see right off the bat, we have our big money index speedometer here. We can see that it's 62.2. So this is telling you we're in the normal range here. Only when we get to the 75% or more do we get overheated, and then overbought is 80 or more. And you can see that on this chart right here. This is our BMI. This is the yellow line. And as it's rising, it's telling you that money is coming into stocks. More stocks are seeing inflows relative to outflows. And then the same thing also happens whenever the BMI is heading lower. It's telling you that the behavior under the surface is changing. So if the BMI is heading lower, that's telling you there are less and less stocks that are participating in a rally. And then more importantly, when you get down to these really trying times, like during April when we had the liberation and the tariff worries, our BMI started to head higher. And this is as the market was still trying to find its footing. And then it took us into overbought periods. Now, you can also see how the BMI correlates with different indices like the Russell 2000 IWM. Now, you're going to see a higher correlation because we've seen a lot of different flow gyrations and rotations over recent years. But by and large, you can definitely get a greater sense of where the flows are. Here we can look at a 3-year chart and you can really see the evidence that whenever the BMI is overbought, that's this red line, when it starts to fall, indices start to struggle. We can see that here as well. This is in February of 2023. And then also here, we see that same period that happened in August of 2023. And then we got oversold in October of 2023 before we had a very wicked rally. Anytime we get oversold, this is 25% or less, that is one of the biggest buy signals you are going to get. Now, let me go over what drives the BMI. You can look at the equity flows and it's going to show you the same pattern. This is the level of buying and selling that's determining the flow of the BMI. Now, the BMI is a 5-week moving average of inflows relative to outflows. Okay, so the BMI started to fall earlier this year, 2025, because selling started to pick up, right? And as buying started to slow, the BMI fell like a rock. And then when we are at lows, we tend to see volumes and selling start to vanish. And then buyers start to mop up a lot of that sell flow. And then we start to see the green wave start to come in. Again, when we're oversold, big buy signal. When we're overbought, it's not a sell signal until that BMI starts to fall below the 80% line. Last thing I want you to understand about the BMI is also we look at elevated trading volumes. That is what we do at MoneyFlows.com. Here you can see there are times when money flows explode, like in April, and we can see that this level of participation rarely lasts, and ultimately we start to see a big boomerang effect that happens afterwards. So be in mind that money flows determines all of the movements or most of the movements of the stocks that you are paying attention to on a daily basis. When you look at money movements with thousands of stocks every single day, you start to see the power that the BMI has for you and your portfolio.